Hey, it's Mike Watson at Keller Williams with your Antelope Valley real estate market update for July 2025. In July, we had an astounding 559 new homes come on the market. That was up 22.86% compared to June, and it was up 24.8% compared to last July. More impressive, I guess, is that that was the highest number of homes that we've had come on in a single month in nearly 3 years. It also brought the total number of homes that we had on the market for the month to the highest it's been in almost 3 years as well. So the inventory is definitely up, and there are way more options for buyers to choose from in the market now. In July, we had 307 homes go into escrow. That was up 10.43%. Compared to June, and it was up 2% compared to last July. So interesting that it was just barely up compared to last year, but was up significantly compared to last month. And this is kind of the range that we've been in for a while now, so no real records being made there like there were with the total number of homes coming on the market. In July, we had 294 homes sell. That was down 5.77% compared to June, and it was down 4.2% compared to last July. This is a relatively low number for us, but it is much higher than we started the year with. So it's doing okay, and it's pretty close to the amount of homes that we had go into escrow. So that's showing a pretty good balance in the market. The average sales price fell to $497,000. That was down 2.69% compared to June, and it was down 5.57% compared to last July. This was also only the second time in the past 12 months that the average sales price fell below $500,000. The average monthly payment saw a pretty significant decrease for the first time in a while. It fell to $3,753. That is based on the average sales price that we just saw and a buyer doing 10% down, and the average interest rate was like 6.72, which was the lowest that we've seen since April of this year. Anyway, so the monthly payment came down 9.4% compared to last month, and it was down 3.3% compared to last year. The days on market also came down to 57 days. That was down 8.8% compared to June, but it's up 54% compared to last year. So with fewer homes going into escrow and selling, they are taking a bit longer to sell. So the 57 days is from the time that we go live on the market to the time that we accept an offer. And then after that, we have the escrow period, which is like 35 days. So again, the average days on market was 57 days for July. Our inventory level, this one's a bit concerning to me, is 4.71 months. So what this means is that if we didn't have another home come on the market and we continued to sell homes at our average pace, that in 4.7 months, it would take us 4.7 months to sell all of the homes that we have. It's up 4.67% compared to last month, so that's relatively unchanged. And it's up 54% compared to last year. A more staggering statistic on this is that it's the highest that it's been since December of 2014. It appears that we are trending towards the buyer's market. This is also the 6th month consecutively that we've had an increase in the inventory levels. So we will see where that takes us for August and going into the fourth quarter, which is when it normally slows down. Hopefully this little dip in interest rates that we saw will help bring more buyers into the market and get the number of homes going into escrow up and start to absorb some of this inventory before we go into the end of the year, or else that'll make for a really interesting 2026. Anyway, if you have any questions, thoughts, concerns, or if you just want to have a chat and talk about what this might mean for you, and if you want to talk about making a plan on any moves that you might have planned for the future, I would love to help. I will talk to you soon.